So if we're about revisiting some of our favorite trading stocks, ZIP, EML and TYRO, those three stocks in the past have been very profitable for us. And we want to take a look whether they could be a good entry opportunity at the current price, or we should wait a little bit more. Now that inflation narrative has changed a little bit, and we've seen Canadian Central Bank cutting interest rates and also European Central Bank cutting interest rates, which ultimately plays as a positive macroeconomic input for companies like EML Payments and ZIP. Regarding TYRO, we still would have to wait RBA to come up with potential narrative of start cutting rates, which we haven't seen it yet, because we are yet to see what's happening with inflation in May, data to be released next week, and that will have critical impact on companies like TYRO and some of our retail stocks. Remember, obviously, that TYRO is a tech company, so is ZIP, and so is EML. My name is Les, and I am Chief Analyst of BG Trading in Australia. Today is precisely 20th of June 2024, and as I said before, we're going to be looking at ZIP, EML, and TYRO. So let's have a look. Remember, before that, this is not a financial advice. It's just from BG Trading sharing with you how we read stocks, how we set up targets, stop losses, how we trade together with our VIP members using what we call BGS20 strategy to chase 20 to 40% profit within 1 to 3 months time, and mostly choosing small to mid-sized caps, sometimes trading large caps if we see that the large caps are sort of has potential to swing at least 20%, which some of them definitely have. I also would like to invite you to our free Facebook community. We call that Buy, Grow and Sell Strategy for Share Traders. Also, please follow us on the Facebook page, which is BG Trading, and hit the like button for our YouTube channel. So we should start with ZIP, ZIP. Let's go on this chart formation, and we're going to have a look what happened over the last 12 months, essentially, because that gives us a pretty good idea. So obviously, before, like in 2022, 2023, the stock has just been falling as a result of 13 expectation of interest rates hikes, and then we had 13 interest rates hikes here in Australia, and then the stock just plummeted. The stock went like definitely oversold. It went down about, I think went down to 25 cents, something like that. Then last year, it recovered all the way up to $1.50. We actually rode this together with some of our VIP members, and we bought around 38 cents, and then obviously we let it go up all the way to $1.15. We saw at $1.15. Okay, we did two trades on this one within this range. We did two trades. So essentially, what happened is we didn't expect the stock would go all the way to $1.50, which was good for whoever has held the stock, and then obviously became into consolidate, like sideways mode, which I thought originally because we had higher than expected the inflation print in March and in April, not only here in Australia but also in the US. I thought the stock would plummet back to a moving average 250, which ideally would be our our ideal entry point. If you wanted to buy ZIP, we would really like to buy around this pink line here, which is the long-term moving average, 250 days moving average. You know, that is when the stock's trading above, it is trading technically in the formal level, but provided that it was oversold here, we could give a little bit discount in that sense. But still, we've seen that any stock goes sooner or later goes towards a SMA 250. So you just gotta make sure if you're buying both days, you know that you're buying in what we call FOMO area for the long term. But this, look, we try avoid normally FOMO area for short term and long term together. Sometimes we just disregard the long term trend, and then if we trade in the short term, then we just consider the short term moving average, which is the red line right there. So essentially here, my expectation after we had this really high inflation print was that ZIP was going to go down towards just under $1, like 80 cents, between 80 cents and $1. That's what I was prepared to buy together with our VP members. However, it actually hasn't hit that level, and in fact it bounced around $1.06, and then the stock rose all the way to $1.46 again, 36% up. We didn't trade that. So I still was expecting to see what's happening with inflation. Now, the media narrative and then and even the Fed now has come up with the idea of the interest rates cut this year, potentially in September for US, which has direct impact on stock like ZIP. It's still on the table. So there is a 60+% bet that Fed will reduce rate in September. Obviously, still subjected to what's coming in terms of inflationary numbers from now until then, but it's very likely, which a month ago, everyone was doomed, and even media talking about that no interest rates cut in 2024. Now everyone is back expecting that the Fed will cut its rate in 2024. I'm talking about US, and not talking about Australia. Australia still, inflation is still higher than ideally we wanted to. But essentially UK, last night UK came up with fresh inflation numbers, and then there was released that inflation in UK was 2%, right at the central bank target, which was a green tick for UK. So essentially, after this, even though European central bank has cut rates last month, then the UK came up with this, which was very, very positive on my opinion. So then Canadian central bank has also cut rates because inflation was down 2.7%, and then still above the desired target of 2% for this Canadian central bank, but was enough for the bank to cut rates as well in Canada. So RBA came up this week and said, Australia is still not ready to cut rates. So essentially, what we're expecting here is that there won't be any rate cut in Australia in 2024. However, there is no guarantees. The narrative changes all the time. It depends on the fresh inflation data that we received. If inflation comes really far lower than expected, and economic growth in the next quarter is really has shrinked or even going negative, I bet that RBA would potentially still cut rate this year. But if the opposite happens, then we might even have a rate hike. But at the moment, I think the market's betting on 50% chance of cutting rates this year. So that's why we have this rally again on a stock like ZIP. And then if you look into from the chart formation, we have ZIP now trading a little bit up at the FOMO area, and there is a hypothetical resistance level right here. When I talk about resistance level, is that's a strong resistance level at around $1.50. Is a multi-year resistance level. We saw the stock going to $1.50 back in 2022, and this is what is playing at the moment. And then obviously it attracts a lot of sellers and people that want to lock in profit. So you just gotta make sure if you're buying ZIP right now, it's likely that if it doesn't break, it's gonna go down again under and test the SMA 40. Look, if inflation comes in line to expectations or under, or lower than expected, then it's very likely that we'll see a ZIP breaking out towards the upside, and that is positive. So just there's a lot of momentum towards a buying activity on ZIP. I only think now for the very, very short term, if you're buying ZIP right now as we speak, you might undertake easily 20% downside in the short term, so just be careful with that. But the long term, the mid to long term prospect for me and ZIP is positive, especially after this double bottom here, and not a breakout of this downtrend continuation here. So we had this essentially, this is what we had for ZIP. We had this let's see if I can write a second. I can draw this out. No, 2 is not working now. Okay, never mind. So this was what we call like a downtrend, and it broke out right there with this double bottom, not to be a lower low. So essentially sideways, and then that's why I'm expecting or either sideways or to break out to the upside. Now the momentum is towards to the upside. Positive buying for ZIP, but ideally we want to be buying again in the next pullback, if it happens, obviously, just under this around $1.20 or under. That would be the ideal scenario. Okay, so I wouldn't be buying at the resistance level unless we see a breakout, a solid breakout right there. But it's still, ZIP doesn't really follow most of technical formation. Hasn't actually been following before. Maybe if the market capitalization increases dramatically as it has been, now it's over $1 billion. So potentially we start seeing more more of usual pattern on the stock price. So essentially for me, I'll wait for a little bit. Once it pulls back, this is no longer applicable, I would say. No longer applicable. I think that we'll see sideways. So I'll wait for the stock to fall a little bit around $1.20, and then potentially we will look into buy depending on the CPI data that we receive next week here in Australia. Just before finishing with ZIP, from the fundamental perspective, ZIP still improving year on year. In fact, half year result for ZIP, the first half year of 2024 was net profitable. The company was net profitable. Obviously, it wasn't organically because there was result of capital coming from asset that was sold, all right? But in line with what analysts thought, ZIP has been continues to improving quarter on quarter and year on year, and then has already become EBITDA positive. Okay, it doesn't mean the company's net profits yet without any capital inflow from sales. So essentially what we need to see in the second half is how close is ZIP from becoming a net profitable company, which the management has promised or has stated that in FY25, that's when the company will present profitability. Now, provided that this is the worst macroeconomic moment from 12 years, because interest rates are so high, not just here in Australia, but in US. So if eventually interest rates cut really start to playing and we have this confirmation and we have 1, 2, or 3 interest rates cut, that will directly benefit companies like ZIP, because they depending on warehouse funding and the finance costs will be lower, and therefore will increase the margins, operational margins for ZIP. And I can guarantee that they're not going to decrease fees for their clients, so or potentially that will increase the margin, and we will see ZIP becoming profitable in 2025, potentially even more than was expected without any interest rate cut. So let's see, we need to see the result first. So we see the result probably August or September this year. So we're a few months away from the upcoming results, but it's good. I think ZIP is a stock to be on at the moment, but in order to enter, you need to be under this red line here just for a safe entry. All right, so let's move to TYRO. TYRO is another stock that has been profitable for us. Unfortunately, last trade we took a stop loss because it was no buying activity whatsoever, and then in combination with a result that looks, even though it was a positive financial result in the first half of 2024, the market didn't like it, and they started selling off TYRO. And that was more to do as well because interest rates are high here in Australia. Inflation was still high. So now what I noticed last week is a significant volume increase on buying activity. So you can see like buying activity increasing and volume increasing as well. And that has passed some confidence that potentially we have a reversal right there. TYRO has actually reached about 76 cents and now is 32% up at 95 cents. So that's pretty much where we end up cutting our losses last time when we bought it, and we call stop loss. But I think now it could be a very interesting opportunity to look into a company like TYRO if you have patience. Okay, one thing that I don't like on TYRO is that we haven't received any update, any trading update since FY24. First half result came in February, which concerns me, or it's making me wonder why they haven't been updating the market. But something is happening, like maybe people know, like inside traders or something, know that something is coming up with TYRO, but without information, it's very vague and it's only speculative approach. So what I would do here is, I think TYRO is a stock to buy. However, I would wait for a little pullback, potentially buying at the low 90s or even below 90s. If that happen, I think it rose too quickly, and we are likely to see the stock start selling off again if it hits $1 at this downtrend here that we can see. This is actually a multi-year downtrend. It started in November 2022. So you just gotta be careful with TYRO here. The chart formation doesn't look very, very compelling. Okay, but the fundamentals continues to improve. The revenue, in fact, has still improved, even though there are some shrinking into economic data. So it has improved still, even with high interest rates. People still using TYRO. Obviously, competition start increasing, especially on POS systems. So maybe that's why companies like investors have got skeptical about TYRO. But I think it's a stock to, if you have patience, is a good stock to hold. And as you probably know, this is also a potential takeover targets because they have a good base of clients, have a bank license, they make money out of loans as well for retail and hospitality, and they're now also increasing their activity in healthcare. So if you're a VIP member, you can have access to our latest stock analysis of TYRO that we've done. That's based on FY24 for half a year result. Unfortunately, we haven't got any updates ever since, so that's the only report we have. Then we also have for ZIP, and we also have for EML payments. Most of the stocks there we like. That's what we put here for our VIP members on the stock analysis. But if you are interested on taking a look on our stock analysis, I will send you the link. Just put at the comments below, and then we're going to be sending that to you. Now, let's move on to EML. This has been a drama stock because obviously they had this problem with PCL business in Europe. Central Bank of Ireland has gave them a really hard time. But if you look at the chart formation, it looks very constructive. And that's what I like EML better at this stage than TYRO. And EML also trading under the pink line and the red line. So at what we call technically fair price. It's not at the FOMO area or anything. So on ascendant support line. So essentially they wind off the business in Europe, and then now they are sort of a clear cut to move forwards and start improving. They have improved EBITDA over 100% in the first half of FY24, which was very positive. But then since March, as you can see, the stock has fallen because inflation was higher than expected. But even with high interest rates, EML benefits from a floating capital they hold when people buy the gift cards and don't spend the money until they spend the money. Sometimes take 1, 2, 3 months, who knows? And then they get interested out of these holding funds. So this is positive. So EML, look, it's more towards a speculative side, but it is a company that has been turning around, has been improving, and has sort of cutting the cancer business that was dragging a lot of capital from in legal fees and remediation and all this type of thing. So the trading range is from now under $1 to $1.20. So we have like easily 20%, 25% in there. And then obviously if it keeps improving like this, we might have a breakout by the end of the year. If we have a breakout, we could see EML going towards $2 again, and sort of resembling what it used to be. So EML, in fact, in 2021 was over $5. Believe or not, was over $5 at the glory times. So this is our analysis for EML, TYRO, and ZIP. For me, EML is a buy at the moment. The other ones, I would just wait a little bit, even though there's a lot of momentum towards to the upside. But if you want to buy TYRO, just make sure you understand that the chart formation for TYRO is a little bit bearish for the long term. We need to see a breakout of this downtrend momentum here. If that happens, then definitely is adding up stock and buy more. That would be based on our strategy, based on our view of this particular company. And then obviously if the full year result is positive as well. And then ZIP, just to wrap this up, ZIP is constructive, but is too high at the moment. So if you're buying at $1.40, bear in mind that could fall to $1.20, and then I would be expecting a breakout to the upside in the future should interest rates cut, and should ZIP show compelling results in this full year result. So this is not longer applicable for me. And if that happens, you will see this SMA 250 moving average going towards $1, and even if there's a correction towards $1, that is when ideally we like to be buying. But still positive outlook for ZIP. Just wait a little bit, buy under here, and bear in mind that it could go down a bit further, but the macroeconomic outlook is positive for all of those stocks except for TYRO. We need to wait what's happening in Australia with RBA and inflation. Let us know what you think, and I'll see you in the next video. Remember, before I'm going, we running an end of financial year offer. Okay, so I'm gonna be putting the details in the description below. Okay, if you want to become a VIP member, that's the time. A lot of stocks are down at the moment. Time to buy and wait for the next rally. Thank you very much. I'll see you in the next video.